All right, picture your financial life like you're a mountain climber hanging off the side of a crazy steep cliff. Right now, if you're like most folks out there, you're literally being held up by just one single thin rope. That rope? That's your salary. Now sure, it might feel totally fine on a calm day, but the second there's any pressure, it starts fraying. But what if, instead of just that one flimsy rope, you were supported by several thick, glowing ropes? Well, that is exactly what we're going to build today. Welcome to This Explainer, where we're breaking down the step-by-step blueprint to finally escaping the single-check trap and building multiple streams of income.
Here's a pretty stark reality we just have to face right out of the gate. Having only one income stream is basically financial suicide. I'm speaking directly to you here, especially if you're part of the US-based diaspora or, a professional working incredibly hard far away from home. Relying on just one single employer, that is a massive, highly concentrated risk. If they decide to downsize or pivot or just randomly let you go, your financial survival stops instantly. Literally, your entire life just halts. We need to completely change that architecture.
Section 1. The single-check trap. Let's get right into it. You see corporate earners bringing in thousands every month, feeling perfectly secure, right? Yet behind the scenes, they're often living paycheck to paycheck. A salary really only keeps you comfortable in the short term. And here is the core, absolute mathematical reason why a salary alone will never ever make you rich. 24. That's the hard cap. Active income has an absolute limit, simply because you only have 24 hours in a day to trade for money. You physically cannot scale your time. And that means hard work alone, it just cannot scale your wealth.
Okay, let's dive into this. The wealthy, they play a completely different game. They absolutely do not trade time for money. On one hand, we've got active income, and that's the classic trap of the 9-to-5, where you work harder, but you stay totally capped. But the real truth, the real secret, is asset ownership. This is literally money that flows into your bank account while you sleep. Wealth comes from what you own, not just what you do. So you've got to stop focusing purely on active income and actually shift toward owning productive assets that do all the heavy lifting for you.
Section 2. The Wealthy Builder Playbook. Let's look at how to actually build these assets.
The absolutely critical thing to understand here is that wealth is built by systems, not raw willpower. Let's be real for a second. Human willpower is incredibly unreliable, especially when, a highly targeted ad hits you at 11 p.m. You get tired, you get stressed out, and that rigid financial discipline just breaks. The wealthy, they don't even test their willpower. Instead, they design automated financial systems that just run silently in the background. They automate their investments and their income streams, so their wealth is just building itself without them having to make a single daily decision.
So here are the 5 specific cash streams wealthy individuals build to move from just raw effort to actual leverage. First up, stock market equity, basically owning shares of growing businesses. Second, rental real estate, which gives you that nice, steady monthly cash flow. Third is scalable business ownership, and I mean the kind that runs completely without your daily labor. Fourth is intellectual property. Think along the lines of digital courses or software that you can sell over and over again. And finally, fifth, cash flow paper assets, like bonds. These systems, these are those thick, glowing ropes we talked about earlier. They run completely independently of your physical labor.
Section 3. Stacking your next stream. Let's talk about sequential growth.
Now, what's really interesting about this slide is that this is exactly where we transition from financial anxiety to absolute empowerment. The secret here lies entirely in the sequence. Step 1 is to actually secure your main salary. Your current job, that's your funding mechanism, so definitely do not go quitting it blindly. Step 2 is to add one small manageable stream, just one. Keep it super simple. And then step 3 is to grow that second stream steadily before you even think about adding a third. Seriously, the biggest mistake people make is trying to build like 5 streams all at once, and then they just fail at all of them. You've got to stack your financial successes sequentially.
So you might be asking yourself right about now, okay, but how do you actually build scalable leverage? Because let's be clear. Adding a second income stream does not mean going out and getting some grueling second job where you're just trading even more of your limited time for hourly wages. No way. You need scalable leverage, meaning the work you put in upfront can generate totally disproportionate financial returns over time. Here are some distinct avenues, derived straight from our source material, for your next stream. You could freelance high-income skills, providing specialized services for premium cash. You could create media content or digital products, where you basically build it once and then sell it endlessly. You could develop automated software systems that literally require zero daily time from you once they're up and running. Or you could pursue dividend index funds, where you just buy shares that automatically pay you cash. Your homework? Just pick one single path from this list. Seriously, do not overcomplicate your options here.
Section 4. Scaling to true freedom. This is the final phase.
And this brilliantly illustrates exactly how a small stream snowballs and completely transforms your entire financial architecture. See, you start with a small extra $500 a month. And yeah, it feels pretty tiny at first, but when you reinvest that money, it creates compound growth. It accumulates mass with time, exactly like a snowball rolling down a massive hill. That initial $500 creates serious momentum, and then that momentum just explodes vertically into massive long-term wealth. You don't need millions to start, guys. You really just need that initial spark of momentum.
This quote right here is everything. Boring consistency outperforms everything. I really need to reassure you on this. Ignore all those flashy get-rich-quick schemes. Fast money is highly unstable, and honestly, it usually just brings total loss. Real wealth, it takes time. It's the steady, super slow stacking of manageable streams executed day in and day out in the background that actually wins the race. Believe it or not, boring investments are what build real empires.
So, where does this all actually lead? Well, it leads to this very specific mathematical target, your freedom number. This is your ultimate exit strategy. You calculate it by taking your monthly expenses, multiplying that by 12 to get your yearly cost, and then multiplying that whole thing by 25. Actually, I want you to calculate your own personal number tonight, because when your multiple income streams generate a portfolio of this size, your investments can cover your living costs forever. You literally never have to work again unless you actually want to. Financial freedom is not some pipe dream, it's just pure achievable math.
Let's summarize the core payoff here. Multiple streams completely remove your risks. When you are no longer dangling from that single fraying salary rope, you are finally protected from the single check trap. If one stream happens to dry up, no big deal. The others are right there to hold you steady. Stacking these streams replaces all that daily anxiety of financial survival with ultimate life options and real tangible freedom.
Which brings us to our final thought. What is your next income stream? You have the roadmap, you know the assets, and you completely understand the math now. Taking action is literally the only thing separating knowing from having. So choose one path today, start building that second rope, and take total control of your independence. Because honestly, if you don't build your own safety net, who will?